Hey guys, how's everybody doing? Let me know if the sound's okay. Hey Stan, what's going on? Um, all right, so I wanted to do a presentation. Let me just get set up here. I'm out of that PDD now, which wasn't too thrilled about that trigger, but we can look at it later. I put my order in the system and ended up getting filled, but that's okay. Um, Still up an hour and a half from this morning on the SWK. And we'll go from there and see what we have in the afternoon. However, I want to kind of switch gears here, and I'm going to take this down. Okay, let me know if you guys can see you guys see the slides here. Okay, awesome. Thanks, Dan. All right, so I don't. We'll see how long this takes. The more interaction from you guys, the better I think it'll go. But this is something that I'm really passionate about. All right, so the title of this, and it's short slides, but we'll see if we can fill it in with a bunch of really good stuff here. So the title of this is "Who's in Control?" The battle may be a lot deeper than it looks. Okay, so we're going to talk about yes, you can ask who's in control as far as the buyers and sellers in the stock market. Okay, so you can ask who's in control as far as the level of conviction in the buyers versus the sellers as far as what makes the price move. Okay, but I want to go into something that's a little bit deeper than that, which is kind of the psychological aspect of the decision-making process when I'm trading. Okay, so we're going to, and we can talk about technicals a little bit, but we are going to kind of step away from technicals just for a minute and kind of talk about the psychological aspect of trading. Okay, so as you guys know, I am a huge technical analysis fan. I'm a trend trader, and I love technicals. Okay, so I think that the psychological aspect is very critical, especially for me when trading. All right. Okay, that's not for me, but the answer is yes. So okay, so let's jump into this. First, I want to say that I'm just a regular guy. Okay, let me get focused here a little bit. So first, I'm just a regular guy. You can look at my bio on T3's website. I used to drive a truck before I started trading full time. Started trading full time about 4 years ago. I did some swing trading and day trading before I went full time, and I probably started that about maybe probably longer than that. I probably started actually trading when I was 18, and yeah, so that's 11 years ago. And then I started like investing when I was maybe like 12, 13 or something. Okay. So I really was just a regular kind of guy. I went to school, got a bachelor's degree in business, and I worked on farms and stuff growing up, and I was just enamored with the stock market. Okay. When it came to the market, I brought a lot of psychological baggage. Okay. There was a lot of stuff that I brought to the market that was not very conducive at all for trading. All right. And the process of trading for me is kind of like a lifelong process. All right. I'm trying to continue to evolve. I'm trying to continue to become a better trader. I'm continuing to grow each and every day. I believe that the market is getting more and more efficient each and every day. And so my edge needs to become better and better. And I myself as a trader need to become better and better. Okay. Otherwise, I'll just put myself out of a job. All right. Does that make sense? So the So I'm a discretionary trader. So I look at technicals. I try to take a lot of the human aspect out of my trading, but when it comes down to it, I trade patterns and I am a discretionary trader. So when a pattern comes up, like the SWK came up this morning, I saw a pattern that I was familiar with and I was like, okay, I got in, right? Same thing on the PDD, same thing on the MO, right? So there is a decision-making process that I have to go through when it comes to when I put on a trade or when I take a trade off. All right. I think a lot of us in here, if not almost all of us, are discretionary traders. There may be some system traders. But I found that I did not have an edge personally as far as system trading. But I do as a discretionary trader through pattern recognition. All right. So being that I have to make decisions, this brings in the emotion aspect, which can quickly deteriorate someone's edge if they're a discretionary trader. So I heard a scientist say one time, and she spent her lifelong mission was to study the brain, and she said that it's impossible for somebody to make a decision without feeling any emotion. So my initial approach was, well, I just need to take all of the emotion out of my decision-making process and just trade like a computer, right? And what I found was that I have to have some emotion in order to even make a decision. So for me, because I struggled with a whole bunch of negative aspects, like not adhering to stops, taking trades outside of my strategy. I would go on tilt, right? And just start trading randomly, increasing size when I shouldn't be increasing size, right? Anybody else have at any point struggle with any of this stuff? Okay. All right. I want to make sure it wasn't just me. Okay. So a whole bunch of stuff. The big ones for me was not adhering to my stops in the beginning and taking trades that were outside of my strategy. Okay. So what I have developed, which has really turned the corner in my trading, was a way to assess my decision-making process and to stay in the zone mentally. All right. So I had a boom and bust equity curve, which looked something like, I think you guys can see this, right? Which would look, well, actually, this isn't actually exactly accurate. So I would make money through earnings season, and then I would give it all back in 2 days. And then I would kind of grind along, and then I would make money, and then I would give it all back. Okay. And I would kind of grind along, do really well, and then all of a sudden I would give it all back. Right. So has anybody ever dealt with an equity curve that looks something like this? Right. Where you're not actually getting anywhere. You're just kind of riding a roller coaster. Okay. So, and in reality, I'm kind of looking for an equity curve that looks a little bit something more like this. All right. So what was going on was I would begin to self-sabotage my trading. All right. So what I developed, which is what we're going to go over, is kind of this 3-step process to keep me from self-sabotaging my trading. Now, the first thing I had to do before we get into this process is I had to begin to take responsibility for everything that I did in the market. That the market does not do anything to me, that I myself am responsible for every decision that happens. Okay? So this quote at the top, it says that the stock market is an erratic environment. And when I let it take control of my trading, that's exactly what I get, an erratic mind with erratic results. Okay? So I wrote this down. I forget when I wrote this down, but that is exactly what my trading looked like. Is that I would somehow find myself with a completely erratic mind, just like JD said, lived on hope and fear, right? Just totally in the swing of hope and fear, right? And to the point where I was just very emotionally disturbed, right? And that was a result of my trading. And one of my initial goals in trading was I wanted to be able to come and go to the market and not allow the market to dictate my internal state. All right. So if I let the market take control of my decision making process, this is exactly what I get, right? An erratic mind with erratic results. Do I have a pencil here? Right? No, I don't. Okay, let me go back. Okay, so throughout the day, even today on a daily basis, like even after the PDD stopped out, I had to ask myself, am I in control of my decision-making process or is the market right now? So I ask myself this question and I go through this process on a daily basis. All right. I don't struggle with the same stuff that I used to. Yes, sometimes things flare up, but I'm definitely not the same trader as a result of going through this process. All right. So here are the 3 steps: identifying my edge, self-appraisal, and actively choosing to take control. So on a daily basis, what I look to do is I identify my edge, I do a self-appraisal throughout the day, and then I actively choose to take control of my decisions in the market. Okay? Does that make sense? Pretty simple, right? It's a pretty simple 3 steps. Has anybody ever tried to do any of this stuff throughout the day? So in the beginning, this wasn't that easy for me at all, but since I've kind of ironed out some of these kinks, hopefully it will be a lot easier for you guys. All right. So identifying my edge. I believe that there's many approaches to the market. Like, anybody ever read the Market Wizards books? Right, Jack went out, interviewed a whole bunch of traders in hopes to finding the golden egg to trading, and what he found was kind of the exact opposite, right? Okay, you have, Matt. Okay, awesome. So he found that each trader actually kind of had a different approach. There were some common things, not through everybody, but through most people. But everybody kind of had their own approach. All right. So I think that having an approach to the market that aligns with your personality and with yourself is very critical. Right. And that is what I found when I came into the strategic day trader room, is that there was a room full of people, that there was moderators in the room that had a similar approach to the market that I did. They looked at technical analysis like I did. They didn't have a whole bunch of indicators on their charts. They just had some moving averages, right? They didn't have all this clutter and stuff. They took a very simple approach. They had a handful of strategies that they executed day in and day out. They didn't stray from a whole bunch of things. And when they looked at patterns, the patterns made sense to me, right? I'm a pattern trader. I think that I have been given a gift to identify patterns. And so when it came time to the market, and I was like, wow, there's actually patterns in price action, because the price is made up of humans and human behavior repeats itself. And so I was like, wow, there's patterns in price action. So I can use this gift of pattern recognition to my advantage to carve out an edge in the market, right? So that's kind of my approach. Now, you may have a slightly different approach. You may have a completely different approach, and I think that's completely okay. But one of the huge benefits of being in a room is that there's a whole bunch of people that are looking at the same things that I am, looking for the same things that I am. We can bounce things off of each other. I can use, by watching and listening to other people's trades, that I can use that kind of as a gauge. And I can also see when I'm out of balance, and so forth. Okay. So it's one of the huge benefits of being in the room. All right. I have to know what falls inside of my edge and what falls outside of my edge. This is so critical. All right. If you asked me what my edge consists of, I can tell you point by point exactly what I look for and exactly what I go after. Okay. I don't have my business plan pulled up here because it's in PowerPoint. I'm running PowerPoint, but if you ask me, I could tell you the exact strategies that I employ. I can tell you exactly what the patterns look like, and I can tell you exactly what falls inside of my strategy and what falls outside of my strategy. Okay? So that's really critical to know what's inside of your edge and what's outside of your edge. If you're just trading on a whim on what looks good, I would never wish anybody negative results, but I've never met anybody ever that just trades on a whim and is successful. Okay. It's so critical to have approach to the market, and what I use is technical analysis. Okay. And I go after the stuff, and I employ the stuff that we teach here at T3, right? Inside the strategic day trader room. Okay. So it's very critical to know what falls inside of my edge and outside of my edge. I need to know this because we're going to get into the next step here, and it's very critical for me to gauge whether or not my decisions are acting inside of my edge, or whether or not I'm on tilt, or whether or not I'm just arbitrarily taking trades to get money back, or what. Okay? It's very critical. All right? I don't think the EDU ever triggered. Yeah, the EDU is canceled. So are we good with this as far as identifying our edge? I don't want to get too deep into the technical analysis aspect and what my edge looks like. It's not because I don't want to tell you guys. I'd love to tell you guys. I love technical analysis. And later on today, you can ask me any questions you want about my edge. Ask me at all, what I go after, what patterns look like. You can ask me anything I want. But I just want to make sure that we're on the same page as far as, are we going after what is inside of my edge and what's out? Okay? We cool with that? It's very important not to get sidetracked. So for me, when I'm playing gaps, do you guys trade gaps also? So when I'm looking at gaps in the morning, like the SWK, one of the big things for me not to get sidetracked is I don't look up the news. I don't. All I care about is if it's a secondary or ex-dividend, or if it's a buyout and it's not going to move, right? Why do I care if it's a secondary, ex-dividend, or a buyout? Does anybody know why I care about those three things and nothing else? I don't care about any of the other stuff. Anybody have a take on why I care about those three things? Yes, I typically won't play them. Stock doesn't move, it's a buyout. Yep, they aren't likely to move. Volatility. Yeah, so I think you guys are all kind of jumping around it, right? Yeah, news doesn't matter as much to me as the picture on the chart. Ex-dividend. Yes, there we go. Okay. So stock falls with the ex-dividend amount, so pretty fixed. Okay, now we're there, okay? So ex-dividend, there's an external source that's coming into play as far as the supply and demand, which makes the stock gap. Okay? I don't know if there was any ex-dividends today. If anybody knows of any, let me know. Man, that HTA really followed through. So the two that I passed on, the HTA and the MO, are really following through. MO is doing a 5-minute sell setup. I'm not going to take anything. I won't be 100% there. So there's an external impact in the level of supply and demand. Same thing with a secondary, right? There's a secondary public offering, okay? So there's an external impact on shares coming to the market. It's not just an imbalance between the current buyers and sellers, okay? So the ex-dividend gap isn't necessarily a real gap because the people that held the stock from the day before got issued the dividend amount, okay? And same thing with the buyout. There's another company that is proposing to buy all of the shares for cash or for stock. All right. So those three things I'm looking at because it is something that is completely disrupting the relationship of supply and demand. Now, if a company comes out and reports news, like I don't know what the news was on the SWK. We could look it up if we really wanted to, but let's see. SWK. Tops estimates, but outlook is weaker than the forecast. Okay. So is that disrupting supply and demand? Well, kind of, but the buyers and sellers that are in the stock are actually moving the price, not some external source. Okay. So the price is actually getting moved by the current buyers and sellers. Okay. So besides that, I don't get sidetracked with the news. Okay? I don't. Because it doesn't matter what the news is as far as my edge is concerned, so I don't look it up. Okay? I don't care if they have good earnings or bad earnings. All I care about is the price action and the pattern. Now, that's just my edge. Okay? But that's an example of not getting sidetracked. Okay. Next slide here. Self-appraisal, number 2. I rely on my decision-making process on a daily basis. Every time I enter into a position, every time I get out of a position, every time I move an order, I rely on my decision-making process. It's very critical. The only thing that I have control over is my decisions. I don't have control over what the SWK did, except for the shares that I purchased. I don't have control over which way it goes. I don't have control over the market at all. The only thing that I have control over is my decision-making process. Everybody agree with that? Okay. So being that that's the only thing that I have control over, the last thing I would want to do is give that control over to the stock market. Okay? So it's my decision-making process is very critical. For me, when I started trading, the number one input into my decision-making process was my emotions, was fear and greed. So, and then I put here, a lot can be revealed once the opening bell sounds. So I've had times, especially early on in trading, where I'm like, okay, I feel great. I'm going to do exactly what I'm supposed to do. I'm going to adhere to my stops. I'm only going to take these patterns. I'm only going to go after this, that, the other thing, right? It's going to be a great day. And I'm ready to go. The opening bell sounds, and all of a sudden I find myself in a position that I didn't even have going into the open. It's not even a pattern. But for 1 second, it looked good, and I'm in. Has that ever happened to anybody? Okay. This is why it's so critical to have a process in this to make decisions, right? So what I do is I begin to take appraisals throughout the day. Because the worst thing that could happen to me is I could take one loser, make one mistake, do one thing wrong, and all of a sudden it creates a snowball effect. So if you read my bio, like 10 years ago or something, I was in a position and I had I don't know, like a $33,000 account or a $35,000 account or something. And 10 years ago, and I got in this position and all of a sudden the stock started to move against me. and I was in the position for like $40,000 or something, right? And all of a sudden, the stock started to move against me. And then it started moving against me a little bit more, and a little bit more, and a little bit more. And it was a penny stock, and it was called NSRS. I don't think it even trades anymore. NSRS was a gold stock. No, it doesn't look like it trades anymore. And I ended up losing 55% of my account in a couple hours, right? Because of this snowball effect. So if I don't begin to get a grasp on this decision-making process and I enter into these absurd states of hope and fear, of hope when a stock is moving against me, that it's going to come back, we're talking about huge losses for me, right? I had days where I entered in and I'm like, I'm only going to lose 3 Rs today, and all of a sudden the bell sounds at the end of the day and I'm down 8 Rs, 9 Rs. Right? This is the kind of destructive stuff that I have to eradicate from my trading. This is the kind of stuff that creates the boom and bust equity curve. All right? So I take appraisals throughout the day. In the beginning, I started doing them with reversal times. Okay? So reversal times are 9:35, 10 o'clock, 10:30, 11:15. And then I go to the 2:15, 3:30, and 3:50. Right? Well, 3:50 isn't technically a reversal time. I use it as a reversal time, though. And at the reversal times, I would have alarms set on my phone, right? Not only because I think patterns are setting up, but I would begin to take an appraisal of where am I at? Who's in control? So this is what I would ask myself. Who is influencing my decisions? Is my edge influencing my decisions, or is the market influencing my decisions? So after the stop on PDD, who's influencing my decisions? Is PDD influencing my decisions? Well, what does it look like when PDD is influencing my decisions? Do I feel like I need to get money back? Do I feel like I need to get a winner? Listen, I'm just a regular guy. Like, don't get me wrong. I'm calling trades live, entering them before, or calling them before I enter them, right? I only called 2 this morning into a room full of several hundred people. That's not the easiest, most comfortable thing to do, right? It's very easy after the PDD stops where I'm like, oh, I was up 4.5 Rs on SWK and I only ended up with 2.5 Rs. And then I gave an R back on PDD. So I'm only up an R1/2. I should be making more money than that this morning, right? All of these thoughts enter my mind, right? So it's important for me to do this self-appraisal and say, okay, even though I took a stop on PDD, that doesn't mean that my edge is somehow all of a sudden different. Not every trade is going to be a winner, right? And so it's important for me to reel in these emotions and say, okay, well, we're going to get into that in the next step. But it's important to do the self-appraisal. Does that make sense? You guys tracking with me so far? Let me get a drink of water here. I'm getting a little fired up. Okay. So it's important that the market is not influencing my decision-making process. David, we can talk about that later. An R is just a predetermined amount from my stop to my exit, a predetermined amount of money that I want to risk per trade. Okay? I know that Amber said that she was recording this. I'll have to talk to her. I'm completely fine with a copy. But let me see if that's actually doable. I don't know. Okay? Let me see if that's doable. But I believe that this is being recorded. So For me, David, my R is $200. I think Yvonne said before his R is $300. And yeah, okay. So for day trading, that is. Yeah, that's perfect. Awesome. Yeah, I didn't even think about that. Thanks, Amber. Okay, so the other thing I ask myself is, am I confident because I know the foundation I created from my edge is lasting? So I refer back to identifying my edge. Okay. So I refer back to my edge and I say, okay, so I literally have a basket. I have an access program, right, of thousands and thousands and thousands of trades that I took. Okay. I don't think it's over 10,000 yet, but a couple thousand of trades that I've taken. Okay. So for me, that's enough. Okay. If you get 100, you can pretty much identify an edge. Okay. So it's really important that I go back and I say, you know what, I have an edge over several years that I know that works. And even though the PDD did not work, I still know that I'm going to win out on the long run because I have an edge that's a solid foundation in my trading career. Okay? So it's really important that our edge is a solid foundation, which we do talk about, which I know Sammy talked about yesterday as far as the gaps video, right? All that's very important. And when I'm doing this self-appraisal, I refer back to that. Okay? Does anybody else here have a basket of like 100 stocks at least, or something else that they have traded, that they've placed, or 100 trades, I should say, 100 trades that they've placed where they can say, okay, I have an edge here, I don't. Does anybody else have that? Where they've done something 100 times and said, okay, this is what I do, this is my strategy, and I have an edge or I don't. Okay. All right. All right. A couple of you do. Okay. If not, you got to do that. I personally think. Okay. So I refer back to that. I don't just sit and focus that I took one stop. I refer back to the fact that on Friday we called a trade in the room here that made I don't know, like I forget how much it made. It made like $1,376 or something. Okay, which for me was almost 7 hours. Okay, but even though I took a stop on the PDD, I need to force myself to remember that I have an edge here. Okay. All right. Last thing here is, am I confident because no matter how the candlesticks form, I have a plan of action in place that covers every scenario. Does anybody else here have a plan of action in place that when they enter a trade, they are prepared for any scenario that happens in the market? Does anybody else have that plan of action? That's where my confidence comes from. All right, David, that's okay. I would get one. That's just me personally. Right? So no matter what happens in the market, no matter how the candlesticks form, when we were in the PDD, when we were in the SW or S whatever it was, the SWK, right? When I was in those trades, I had a plan of action to cover every scenario, how the candlesticks form. The reason why that's so important is because I need something for myself that's hard lined, that was like that says, okay, this is what I'm going to do. Because even though I started getting red bars and I got a breakout failure right after the PDD triggered, I had a plan of action. Okay? And I can stand firm on that plan of action. It helps me regulate my emotions. So no matter what direction PDD goes, whether it's up, down, sideways, or gets halted and opens somewhere differently, I have a plan of action. Okay? So these are the kind of questions that I ask myself. And the last two, I'm really kind of reminding myself that my confidence is in my edge that I created. It's not in this one trade that I just took. Winner or loser, my confidence is in the long run. That's what I'm here for. I'm here to trade for the next 25 years, right? I'm not here just to make money on a Tuesday. Yes, I want to make money on a Tuesday. Yes, we're making money on a Tuesday, but my edge is here for the long run. By the way, that SWK looks lower. Okay, we good with self-appraisal? Any questions about this? Before we move on here? We got 15 minutes. I think I only have 2 more slides left. Okay, so step 3 is actively choosing to take control. If I'm feeling erratic emotions and lack of true confidence, I really do have a choice to make. I really can't say that enough. The market is not doing stuff to me. The market is not making decisions for me, right? I do have a choice in the matter. Even though the stock starts to move against me, I do have a choice. When the stock moves against me and I move my stop 5 cents away, and then it comes to close to the stop again, and I move it another 5 cents and another 5 cents. And now I know that I'm 2 R's down, even though I wanted to only risk 1 R. I can't take a 2 R loss here. And so I have to move it again, and I have to move it again, and the stock continues to move against me. And in my mind, I'm going, why is this stock doing this to me, right? That ever happened to anybody else? Those are the erratic emotions that are going on. And I tell myself that I don't have a choice in the matter. When I'm having a huge drawdown day, right? Like let's say I'm down 3 R's and I'm like, oh, which is the max that I can be down in one day. And I'm like, okay, I'm down 3 R's, but today's not the day I should be down 3 R's. And so I really should take another trade. And I take another trade and it stops. And then I'm like, well, I can't stop here. I have to keep trading. I have to get that R back because I traded past my max R loss. Right? Or let's say the open comes and I take a trade that's outside of my edge. And I'm like, oh, I know this is outside of my edge, but I should take it anyway. Right? And I take a trade that's outside of my edge, and all of a sudden it stops. The emotions that come up with that is like, I did something I was not supposed to do. I need to fix it. There's nothing a matter with trying to fix it. The problem is that my go-to when I'm very emotional is trying to fix it some other way. Okay? Let me ask you guys this. So as you guys know, I'm a trend trader, right? The longer I stay in a position, the better. Statistically. Okay? Has anybody else been down 3 R's or whatever their max R is, right? And they got that feeling of that they need to get money back. Has anybody else felt that feeling? Has anybody else struggled with that? Because I know that I have. Okay. When I'm in that place, okay? When I'm in that place, what is the first thought that follows I need to get money back? What is the first thing that comes after that? There's one word that comes after that. I tell myself I need to get money back now. Right? I need to get money back now. I need to get in a trade right now. Right? I need to do something right now. I have all this emotional discomfort in my life and I need to fix it. I do not want to feel this way. And so I need to change this, right? Yes, compelled to trade, make up patterns, all of this stuff, right? And I want to do all of it now. But the reality is my edge says the longer I stay in a trade, the better off I'm going to be. So a 4-hour trade is normally a really good trade for me. So when I'm at this place in my mind, I'm not going, the first thought is not like, you know what, Ryan, you're down 4 hours, you need to get money back. Let's take a trade and sit in it for 4 hours to get the money back. That never comes to my mind. right? Never comes to my mind. But this morning when I was in the SWK, in my mind, because I'm sane and I'm not trading off of emotions, my hope with the SWK was, man, I hope it just trends all the way to lunch. I hope that we're just still in this at lunch. I hope it just continues and just keeps going until lunch. The last thing I want this thing to do is to drop 2-3 yards R's instantly and then immediately reverse, right? All I want this to do is just slowly grind for a couple hours, right? You guys follow what I'm saying here? Where when I am at this point where I feel compelled to trade, making stuff up, just so erratic, I've entered into that kind of like fight, flight, freeze mentality in my mind, where I begin to just fight the market. And in turn, I actually work exactly against my edge. Right? So go back and look at some of the trades you took when you were in this state of mind. And what you'll most likely find is that the trades that you took are in the exact opposite of your edge. And because our edge is so small, because the area that's inside of our edge is so small compared to the area outside of our edge, when we start making decisions outside of our edge, we erode our edge exponentially. It's not just a one-for-one deal. It's an exponential erosion. Okay? So I need to remind myself that I'm making these choices to do this. I'm responsible for this. Okay? It's one thing that all these career killers have in common. I only choose these things when the market is in control of my decisions. The crazy thing is I only work against my edge when the market is in control of my decisions. I very rarely, instead of it's just a lapse in mental judgment, which is very rare, I very rarely make any of these decisions here, ignoring stops, having huge drawdown days, taking trades out of your edge, right? I very rarely ever do that when I am in control of my decision-making process. And that's why it's so important to take back control and to return back to my edge. When I am acting inside of my edge, that's really where the money and the peace of mind is. It's really where the money and the peace of mind is when we're inside of our edge. Okay, last slide here. We are all intelligent people. I really believe that. If you are here looking for something more in your trading, you have what it takes to be successful. If you made the step to come check out something else, to check out something new, or if you're a current member that's been in the room, we all have what it takes to be a successful trader. Like I said in the beginning, I really am just a regular guy. I used to drive a truck for a living, right? At a feed mill. So I really am just a regular guy. By taking this 3-step approach, we no longer have to self-sabotage our trading. So critical. Why is this so important? Remember when I drew this? Right? These drawdowns, you guys can see these lines, right? These drawdowns. What are these drawdowns made of? What are they made of for you? Yes. which leads to having a 10R down day, which leads to, maybe you only have a 3R down day, but you go into the next day feeling emotional. Then you have another 3R down day. Then you have a 1R down day and and then a 2R down day. And then pretty soon it's Friday. It's the last day of the week. And you're like, I lost money every day this week. I need to do something. Right? And it all started because we started making decisions which were influenced by the market. Yes, double down on a loser, right? Now, here's the really cool thing about this. That if you even if you just cut these in half, right? Even if you just cut these in half, what do we have? Right? At least we have a nice slope in an equity curve, right? Even if you just cut them in half. Each and every day when I approach the market, yes, there's a battle over buying and selling shares, but there's also a battle over control. A control for me. I know it's kind of a weird way of looking at it, but there's a battle going on whether or not I decide to give my decision-making process over to the market or not. And I think the most beautiful thing about trading is that we get the opportunity to be the sane one. That's what we do here in the Strategic Day Trader Room. Is our approach is to be the sane one in the erratic market. That's what the professionals do. All right. Any questions about this? Anything at all? It's a pretty simple process. It took me a while to kind of pick up, but that only means that it'll be easier for you guys, right? So it's a pretty simple process. We just start with identifying the edge, doing a self-appraisal, and then actively choosing to take control. All right? Thanks, Jason. Thanks, David. All right, let me know if you guys have any other questions. I'm going to give you guys a 4-minute break or so. And Sammy is coming on at 1. No problem. And David, thanks, Dan. Thanks for being here. Jason, I will when I'm on at 3, Jason. You going to be here at 3? Okay, 3 o'clock. 3 o'clock. How often do you find change your edge? Hey, Paul, that's a great question. I would say that in the last 3 years, I think I've been trading full-time for maybe 4 years, a little bit over 4 years. But I would say in the last 3 years, I've made 2 large changes. So it took me about a year to kind of figure out what I liked, what I didn't like, what was working, and to kind of identify my edge. And then since that, in the last 3 years, I made two big changes. One was a management change that I made recently. You guys in the room will know when I made it. I think I made it in October, September, something like that. And then about maybe a year and a half ago, probably by now, I decided to take a strategy out of my business plan. So I took a strategy out of my business plan because it was no longer giving me an edge. Okay. So really only 2 changes. All right. Q's trend day. We talked about this. New lows after 10:30. Trend day here. Hey, Chuck. I think it'll be emailed out. All right. Did I miss anything else? Hey, Don, if you have any questions at 3, just ask. You going to be here at 3? Okay, awesome. Thanks, Amber. You going to be here at 3, Don? Because I'll, if you have any other questions, we can go over them then. Okay, we'll talk about it then. And we'll talk about volume 2, Jason. All right, everyone. I'm going to jump off here. Thanks for listening. You guys were awesome. And Sammy will be on here shortly. Thanks, everybody. I'll be back at 3. It'll be Sammy E.